Welcome, traders, to another Tick Mill trading update with me, Patrick Munderley. Want to update the SP 500 view using the E-mini futures contract and look at some high probability action areas and price targets for the trading week ahead. Before we jump into the technical picture, let's take a look at where we are on the macro side of things. So, over the weekend, we've had another round of Trump tariffs announced, which have had a more muted response from markets really than what we saw certainly last week. Trump has suggested 25% tariff on steel and aluminium imports, and that has seen the market trade lower overnight. But we've recovered those losses, and we're now actually trading modestly up on the session. And so there is a sense, I think, within markets that in terms of a narrative, the tariff narrative is starting to have less of an impact on markets as participants view this more as a tactic than a long-term implementation process of the tariffs. So it's really Trump trying to bully these trade partners into more favourable terms of a deal, and so markets are less alarmed by this approach at this stage. The main macro driver for the week ahead is going to come in the form of US CPI, which is released on Wednesday, and and that's going to be the real macro pinpoint for the week. I would note that on Tuesday and Wednesday also we have Fed Chair Powell in semi-annual testimony to the House and to the Senate. So that could also add some volatility on the basis that markets will be keen to see how how Powell views Trump's tactic and how that can impact the rate trajectory in the US. Also, his views on the labour market as well will garner attention, given the non-farm payrolls release on Friday, and so we can see some potential there for some volatility as we head into the middle and into the back end of the week. We get closing out the week, we get retail sales out of the US. Given the response that we saw from markets on Friday to the University of Michigan sentiment, it will be interesting. Markets will certainly be paying close attention to the robustness of the US consumer. I would also note that JD Vance is in Europe this week. He's attending various conferences, and will Trump use his presence there to land some tariffs or the threat of tariffs on the EU? That could also be another cause for volatility, and how the EU then chooses to respond. They have suggested that they would look at reciprocal tariff strategy. So there are a few tape bombs in the offing at the moment as we come into the week. So the recovery that we've seen overnight was positive. Certainly doesn't suggest that it's going to all be one-way traffic for the week ahead. Before we jump into the technicals, let's update the seasonal perspective. I've been tracking this 25-year look back, looking at post-election years, which has been tracking quite well, and that suggested that we could see a local trading high develop into the back end of last week, which we currently have. You can see from the pattern that we can see some recovery here in the early part of the week, but then ultimately we are looking for more weakness to develop in the markets. As I always say, this certainly doesn't trigger a trade entry for me, but it is something to be cognizant of, and certainly can add to confluence. So we'll see how this pattern plays out, but it's tracking pretty well as we speak. So let's move into the charts, and starting on the higher time frames, the weekly and the daily time frame. You can see my position update here in the lower corner of the chart. You can pause the video to review the positions and my current risk on those positions. From the technical side of things, 60.65 is the weekly volume weighted average price. You can see from the chart that we've basically gone sideways since we put in that peak into the middle of December. So we've been pretty much doing nothing in terms of directional advance, whilst volatility has certainly peaked. So we are seeing a lot of two-way action in the markets. Versus the 5117, our price objective for the 5 equals 1 objective on the weekly time frame is still at that 62.31. On the daily time frame, we have another sequence here versus the swing low just above that 5800 level, gives us 63.51. So those are the upside targets versus those pivots. So keep those levels in mind. In terms of weekly range expectations versus the options market pricing of implied volatility, suggests we could see resistance at 61.14 and support down to the 59.18 levels. Keep those levels in mind. Let's move into look at the plan for the week and some key levels that I'm tracking. So what I'm looking for is more volatility, essentially, with a downside skew on it. So just because volatility is rising in terms of the VIX, for example, that doesn't mean that we are in crash conditions. To me anyway, what it implies is that we likely see wider swings in the market. And so whilst I am looking for the downside, there can be swings to the upside that are certainly tradable on a intraday or daily time frame. So keep that in mind in terms of the volatility pickup that I anticipate we'll see. It doesn't necessarily mean that we only see one-way traffic. So we've recovered off the overnight lows, and we're grinding higher here into the open of trade in New York. So for me, what I'm going to be looking to do here at the beginning of the week is lean on my weekly bull bear zone. I'm using 61.14 to 61.24. That coincides obviously with that weekly range resistance on implied volatility. So if we can get a grind up into that 61.14, 61.24 area, I'm going to look for bearish reversal patterns to add to short exposure. The first downside objective will be a test of the daily bull bear zone, which is the 60.10 to 6600 level. Again, I would be looking at potential counter trend opportunities or trading intraday opportunities to trade that as support to the long side. But really the lean to start the week is going to be against the 61.14, 61.24 area. To engage on the short side, we're going to target the daily bull bear zone on the downside. We have daily range support coming in as well at 60.08. So I'd anticipate that if we can get any move down into that area, to look at booking intraday profits or certainly removing risk if you're swing trading on the short side. And then what I'd be looking for is bounces back into the volume point of control, so that 60.50 to 60.60 area. That is going to be a key battleground, I think, as we go forward this week. And you'll remember the weekly volume weighted average price comes in there. So whilst bears can defend that area, I think we can see further downside. And my ultimate objective for the week will be a test of the weekly projected range support 59.18 to 59.08. Certainly, if we're trading into that area into the back end of the week, again, I'd be looking to book profits or trade on the long side from that as acting as potential support on the downside. That would really be the key support zone for this week. And we'll see if we can get a test down into that area. Now, if we don't find sellers stepping into the weekly bull bear zone, that's going to start to shift the focus to a potential grind higher here. And certainly if we start to see prints on a daily time frame back through the 61.40s, then that's going to encourage further long exposure, targeting move up to that 62.50s as the next pivotal upside objective. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.